Consumer Media's Mining Weekly is speaking to Trevor Raymond, the Director of Research for the World Platinum Investment Council, the WPIC. Trevor, could you tell me about the sustainability of the PGM prices, which are looking pretty good at the moment?
Martin, hi, thank you. Yes, I think the interest in platinum group metals is high at the moment. And as you know, the WPIC doesn't forecast price, but one of our important roles is to make sure that firstly, people are aware of platinum as an investment asset, and secondly, they need to be able to take a view on price. And that view is probably governed by three dominant features at the moment. So in terms of the impact of the global pandemic, we've had an increase in global risk, and as a result, precious metals are in demand. People want a hard asset, people want something that's uncorrelated to equities, and gold is extremely popular. So platinum fills that role. It is a precious metal. The price of platinum is highly correlated to the price of gold. So people that are using gold as an alternative asset are also able to use platinum because of that high correlation. And then secondly, because platinum does some fantastic things in industrial applications, platinum has an additional benefit that it can do some good things, particularly post the global pandemic. And thirdly, investor interest has been poor, prices have been low for many years, and there's significant investor interest at the moment in that metal. And that's probably the third thing that is driving price. So in terms of the sustainability, the other aspect you mentioned, platinum group metals, that includes dominantly palladium and rhodium, also used in vehicle autocatalysis. And what's going on in those markets is certainly impacting PGMs. So I think all three of those PGMs are in deficit over the next few years, make it very interesting, both for the people that produce them as well as for those that invest in them. So I think sustainability looks strong, and we can delve into some of the detail, Martin.
And what is the impact on actual physical investment in platinum?
I think there's sort of two aspects of the investment market that people tend to look at. Firstly is the sale of bars and coins, and those are physical that are purchased and held, kept at home in a safe. And the other are ETF, exchange-traded funds that are listed around the world. And those investors invest in a traded instrument on an exchange that is backed by physical platinum metal. And we saw in 2019 an additional 1 million ounces that went into platinum ETFs, typically large institutions, many that your audience know well. The South African institutions are long platinum and typically use ETF long-term positions. So we had an extra 1 million ounces go in last year. What we've seen this year has been quite fascinating, is that in the first quarter, we had over 300,000 ounces of bars and coins purchased. And that came out of the traditional market of Japan. But very interestingly, there was strong demand for platinum bars and coins out of the US. People wanted to own these. And in fact, because of COVID impacting northern Italy so badly, the refineries in Switzerland are close to northern Italy, and they were shut down for some time. So physically, you couldn't get these platinum bars and coins. It affected gold and silver too, but you couldn't get these platinum bars and coins into the US, and pretty much everything sold out. Some people had to stop offering product. We've seen that recover, but the 300,000 ounces was almost unprecedented. Now, some people some investors, institutional investors, tend to look at ETFs more as a stock than a demand. That's a long debate, but that is their choice. However, 300,000 ounces of bars and coins was a lot harder to ignore, and we're forecasting that in 2020 there'll be 600,000 ounces of platinum bars and coins purchased. And that's what's got investors looking at it a little more carefully, to say you can't quite ignore that. Bar and coin demand tends to be very sticky. And the kind of people that are buying gold are worried about what the pandemic will do to the world. I think we're in for a pretty rocky next 2 or 3 years. And people are saying they'd like a hard asset. We've seen the gold price run up. And platinum certainly has been in demand in that respect. So watching what the retail investors did in the first quarter, fascinating. It seems to be strong. We publish again on the 8th of September, and we'll have a better read on what happened in quarter 2 with those bars and coins. But certainly investor interest is strong. ETF flow has been particularly strong. It was knocked. There were sales of over 300,000 ounces during March. That's completely recovered, and we're positive again with ETFs and strong inflows, particularly out of North America. So I think, Martin, the investors are looking at this saying, this looks pretty interesting. Platinum at almost half the price of gold just doesn't feel right. For 45 years, it sat at a premium to gold. So I think there's a lot more interest that we've seen, and that certainly is one of the demand drivers that is underpinning stronger prices.
And if we look at PGMs as a whole, what is driving that demand for PGMs globally?
I think the big driver that we've seen in the last few years has been all about palladium. So traditionally, the emissions limits in the rest of the world were always much more stringent than China. So the US and Europe always led tightening emissions control, and China lagged. And what that meant is that the fabricators of catalysts globally, each have a 30% share, Johnson Matthey, BASF, and Umicore, they would produce these catalysts for the West. And when it came time to introduce them into China, they'd already become quite efficient. So loadings in China typically were much lower than the West. And when Europe went from Euro 3 to Euro 4, China was probably on Euro sort of 2.5 by equivalent. The interesting thing about China 6, and that's China numeric 6 for passenger vehicles and China Roman numeral V1 6 for heavy duty, that implementation of China 6 is actually more stringent than RDE in Europe, and it's more stringent in terms of particulates than the emissions control in the US. And that is quite material. And what happened in 2019 when China started implementing is the loadings on vehicles went up by 40%. There was nearly an additional 500,000 ounces a year of palladium demand that went into China for them to implement that more stringent emissions rule. So what you've had is this long string of deficits in the palladium markets, and you saw the palladium price, double from 700 to 1400, and then double again from 1400 to 2800, and it's currently sitting at around 2,000 ounces, and that's really a reflection of the fact that the Chinese automakers buy in the spot market to make their largely gasoline car fleet, and as a result, they need that palladium, and particularly the loadings on rhodium went up higher. So you've seen palladium and rhodium prices go up significantly purely on the back of China 6. Those prices have benefited the South African producers significantly. But the real issue is that the substitution between platinum and palladium at a 1-to-1 ratio has happened before, happened in 2000, significant amounts. Platinum went back into gasoline cars. We saw in the mid-2000s when rhodium was again at $10,000 an ounce, palladium substituted it. So the ability of the automakers and the fabricators to change the ratio of these metals in catalysts is a long-standing expertise of surface chemistry. So the substitution is quite important to platinum because even if there's only a small amount of substitution, even just 5% of vehicles in China and the US are gasoline vehicles, that's 450,000 ounces of platinum. So for platinum, that's a big deal. For palladium, it doesn't do much to solve the deficit. But for platinum, it's quite a big deal. In May, we forecast a surplus this year of about 450,000 ounces. A little bit of substitution suddenly makes that zero, a bit of investor interest, and suddenly you're looking at deficits for the next little while in platinum. So quite a big deal. The interplay between those metals is really quite important. And then for platinum, the other big dominant theme industrially is the fact that diesel is become much more important, particularly during the pandemic.
And the H word is popping up in a lot of places. CEOs of mining companies are mentioning hydrogen as a potential driver. What are the prospects for hydrogen, fuel cells, and the green economy, and what is the role that platinum can play in this?
So, Martin, for people that have been in this market as long as you and I don't mean that in any disparaging way, we're just wise, we're not old. Fuel cells have always been the long-term future, and they remain so. But there's been a big game changer. I think the thought of all the movement in battery electric vehicles has said that people sort of see battery happening, they don't see fuel cell happening in passenger vehicles, and that's fairly true. In terms of the necessary infrastructure, I think the pandemic is going to place huge pressure on sovereign funds, and for governments to roll out, firstly, the charging infrastructure, but more importantly, the electrical grid upgrades necessary for the charging infrastructure for a high portion of battery vehicles. I think that funding is going to be under huge pressure. And that does two things. One, it makes hydrogen more interesting. But two, it also means that the internal combustion engines that are left on the road need to be clean. And if you've got a long tail, however the transition between internal combustion and fuel cell takes, or fuel cell and battery takes, whether that's 10, 20 or 30 years, you've still got a lot of internal combustion engines on the road that need to be clean, and that's important for platinum. So in terms of fuel cell, it's fabulous to see that the infrastructure is being focused upon by national governments. Europe has put out a hydrogen strategy. Hydrogen has been recognized in many countries as an official fuel. And the move from fossil-based to hydrogen-based is absolutely sensible and sustainable and inevitable. So that's good to see, and we think those developments are important. And as you say, there's lots of news flow around them. On the consumption side, I think the demand from a large portion of fuel cell electric passenger cars is probably 5 years away at least. And the investors that we engage, typically anything more than 2 or 3 years, is of almost no interest to them. So in the 5 years that the WPIC has been around, when we would talk to fuel cells, people would say, that's cute and interesting, but it's just too long term. The game changer has been heavy duty trucks. So the actual ability to make a fuel cell electric truck is just, it's doable. A fuel cell battery electric vehicle just isn't. The battery's too heavy, the weight is too much, and the payload gets compromised, and the recharging times are just too long. So you've had a big focus on fuel cell electric trucks. Toyota, Kenworth, Ballard, Honda, Cummins, all the big participants are making trucks. They're on test at the moment. There's 10 Class 8 trucks in the port of Los Angeles, Beijing, Shanghai, the bus fleets, Tokyo bus fleets, big focus on these. And that, for investors in platinum and investors in PGMs, is very important. Over the next 2 to 3 years, you're probably going to see about 100 or 200,000 ounces of platinum go into heavy-duty trucks. So the other one that has got a fair bit of airtime is the fact that you can electrolyze water to produce hydrogen, and that gives you green hydrogen if you use the electricity from renewable sources. But what you've got going on there is that there are very good cathodes and anodes that are used in that electrolysis process that contain platinum and iridium. Unfortunately, iridium isn't an abundant metal. It's an excellent PGM, but the platinum iridium alloy, there's just probably not enough iridium around to do that on a mass scale. So there will be platinum involved in electrolyzing water to produce hydrogen, and that certainly is a demand over the next few years, and we're very pleased about that. But the material volumes from an investment point of view will certainly come from the heavy-duty truck applications in the next while. But you're right, big theme, hydrogen is really important to these markets.
And post-COVID, do you think climate change will continue to drive this demand? Do you think that these emission regulations will intensify, or have they peaked and will they stay where they are?
So Martin, I think COVID has been tough for everybody. I think it's allowed people to reflect. I mean, we were looking yesterday at the impact on love. Sorry to digress here, but platinum is still the premier jewelry metal around the world, and we know that when people reevaluate their lives, giving something special to a loved one starts to come up high on the agenda, especially if you're not using your money on other disposable things. So the concept of using platinum jewelry as a love gift in terms of the values that are around, very important. The other value is just about clean air. We've all seen what clean air looks like during the shutdowns. And I think the fires in Australia might not be in regular news flow at the moment, but they certainly really hurt and are in the back of our minds. So the world wants cleaner air, certainly, but the cost of COVID is just unprecedented. So what I believe is that the money available for battery electric rollout is going to be curtailed. So that means, one is that you can still do some things about climate change. And the thing you can do, one of the strange things, and it's already happening, is the diesel vehicle. The diesel engine was always 20 to 30% less CO2 than a gasoline one. And that's why they proliferated in Europe. And that's still true now. In fact, if you take what is a diesel mild hybrid vehicle and you compare it to a conventional gasoline vehicle, the diesel mild hybrid emits 35% less CO2. Now, that is a big deal. And if you can capture that 35% less CO2 with little cost, and it is little cost because the automakers over the last few years have been trying to avoid CO2 fines in Europe, and they've developed some fantastic diesel mild hybrid vehicles. They've done some gasoline mild hybrid, and that certainly will get the CO2 down even if battery doesn't proliferate. So I think the opportunity for the world post-COVID is to say, what is the most cost-effective way of still addressing climate change? How can we get that down? The diesel mild hybrid is an absolute sweet spot to do that. Fuel cell is a little bit slower, certainly will help in terms of diesel. And all the battery vehicles that are around and available, certainly if they get deployed, will be a great benefit, even gasoline mild hybrids. But whether you're talking diesel mild hybrid or gasoline mild hybrid, that's still a strong PGM demand, and this interplay between the markets is there. So I think there'll be much more focus on the cost efficiency of managing climate change. And again, platinum sits in that sweet spot, Martin.
And are there any new uses of PGMs that are significant and could make a contribution soon or in the medium term or in the long term?
So I think the nature of these metals, there's literally tens of thousands of patents that are registered each year related to PGMs, and that's just because they do some remarkable stuff. So there are a lot of things that have developed, things like keeping fruit fresh with a small amount of palladium in a packet of strawberries that make it last another 10 days. Those sorts of things are ongoing. There's nothing major that's a breakthrough. However, the efficient use of the metals across things like, fuel cells were used to get to the moon. So it's technology that's been around since the 60s, and it's just tweaking and applying that. Many other applications of these metals are available to make things better. But there's nothing earth-shattering that I can mention, but there's a lot of work going on, particularly things like, as I mentioned earlier, the platinum iridium electrode that makes electrolysis of water much more efficient. That's a really, really helpful and useful thing. So there's lots of those going on behind the scenes. A lot of the minor platinum group metals, Anglo American has a venture capital arm called AP Ventures, and they specifically focus on companies that are using platinum group metals in creative ways, and they allow them to invest in them to allow them to grow. So there's some significant effort and money going into those kind of activities, and we always keep an eye out. But the nice thing is that there's just such a large use that there's a great interest in all of these metals.
Are there any other aspects which you'd like to highlight at this stage, or do you think we've covered everything?
So I think the other driver, Martin, that I mentioned the investor interest. I think the thing that hasn't been around for us for the last 5 years is a demand growth potential for platinum. And the one is the substitution between platinum and palladium, and that is a material that we believe is happening. And to have a demand driver like substitution, more diesel vehicles on the road, constrained supply. We haven't really mentioned the supply side of the equation, but you've got this demand growth potential with significant investor interest because of global risk. And on the supply side, yes, COVID has impacted supply. It's reduced the number of vehicles being sold, particularly in Europe and the US. China came back quite quickly, and the China and US markets tend to be palladium, so hence more demand for palladium, and Europe tends to be platinum. So to have the platinum demand come down because of sales was certainly a concern. There were two things on the supply side. So obviously the efforts to address the spread of COVID in South Africa means that mining has had to be extremely focused. And there were the shutdowns, the 3 weeks, the 5 weeks, and building back up to full production. So COVID has reduced supply, but in addition, you'll be aware the Anglo American platinum converter plant that takes the material from their 4 smelters, that was out for 80 days, and that's taken about 550,000 ounces out of it. Without that, probably COVID would have been quite harmful to platinum, but because that occurred, platinum's probably in better shape after COVID than it was before. So I think supply is tight. The shutdowns probably mean that metal, due to the converter shutdown, won't appear next year. It probably remains out of supply. So I think we've got a situation where supply is down almost as much as demand is down, keeping this market particularly tight. And again, very interesting. So I think on balance, what we're trying to share with investors as we do is to say, this is something interesting. Platinum at half the price of gold just doesn't feel right. And the other thing is that gold tends to be fully valued. There's thousands of commentators on gold. Gold tends to do what it says on the tin. If you get a view on inflation, gold responds. If you get a view on US non-farm payrolls, gold responds. But platinum follows gold, but in addition, certainly appears undervalued compared to palladium, compared to gold, and certainly against historic uses of platinum in the great things it does in industrial applications. So I think that's about the essence of the investment case at the moment, Martin.
That was Creamer Media's Mining Weekly, speaking to Trevor Raymond, the Director of Research for the World Platinum Investment Council, the WPIC.